What's up, friends? Welcome to Web3 Academy, a place for entrepreneurs, creators, and marketers to explore and learn how to use Web3 to transform business models and create thriving communities. Enjoy this next episode.
GM, what's up, Web3 friends, Web3 doers? Wow, what a week. It's the weekly roll up.
I feel like we say what a week every week, but this one's for real.
I feel this one in my soul. Kai, how you doing?
I'm surviving. I'm alive. For the most part.
That's good, man. Happy to hear it.
Just kidding, everyone. Everything is all good. We're going to be okay. It's all fine. It's just crazy, but it's fun.
This is what happens when you're building an entire new world, when you're going through a revolution.
Right.
There's big highs and there's big lows, but we all get through it together. And we get through it together by learning and by making sure we're on top of everything. And that's what this podcast is all about. So let's jump into it. But before we do, we always like to take a deep breath and share gratitude. Particularly important to share gratitude in the times like these. Kyle, what are you grateful for today?
Well, before I get into that, first, there is some good stuff we're going to talk about today too. So quick outline, we're going to talk obviously about Luna and UST and what's all going on there. We'll give you guys some more information. We're going to talk about big tech entering crypto and Web3. There's a lot of actually really good things in terms of adoption that we're going to share. So we will talk about that. Is Coinbase becoming the next Apple of Web3? We're going to discuss that. And then we got a bunch of other things, as well as our Web3 protocol, our tool of the month. So we will dive in there. What am I grateful for today? I am grateful for Nicaragua. I have just a couple of days left here, and then I am off to the Permissionless conference in Miami. And then I'll be in Mexico City after that. So just super grateful for my time here. And yeah, that's all.
Nice. I am grateful for the Web3 Academy Discord, and I'm grateful for community and Web3 in general. If you're not in our Web3 Academy Discord, I'm partially shilling it as I say this, but I'm grateful for it because when we have challenging times, we need support and we need each other. And having a place where I've never met some of these people. 99% of these people in the Discord I've never met. And there's people sharing vulnerably the struggles that they're going through and their mental health and what they're feeling. And then there's people helping out and saying, hey, I feel the same and I've gone through similar things and here's what I've done. And so it's amazing to have, when you're falling, you need a net. And a community is really your net when you're struggling and when you're falling. And the Web3 Academy Discord has been a great net this week of support and positivity, which has been really, really cool to see. It's amazing how online communities develop in such a powerful way and so supportive. There's just this amazing culture of Web3 to support each other and to collaborate and to make a better future.
We even have a bear market cope room in there right now.
That's right. That's right. Just makes me feel good. So shout out to everybody in the Web3 Academy Discord. Thanks for being you. Thanks for being there.
Yeah, absolutely agree. Discord has been really cool. We're getting a lot of people in there and a lot of great conversations, both in terms of what you said, Jay, but also in, I think, people helping each other, just understanding and learning the space and building in the space, et cetera. And so it's been really cool to watch. I guess on that note, real quick, before we dive into things, Jay, and thanks for sharing that. We're tokenizing this Discord. So it's going to be token gated by an NFT. It is a free NFT if you're not aware. But you just need to fill out an application and then we send out approvals. The first round of approvals went out this week on Monday. So if you already filled this application, make sure you check out your email. There's a link in there to claim your NFT, and then you just go in the Discord, hit the verify NFT channel, and you can verify it. On May 15th is when we will be locking down the Discord. And if you don't have that NFT and if it's not verified, you won't be able to see any more of these channels. So make sure in the show notes, you'll see there is a application form. Make sure to fill that out and then follow the steps.
Awesome. Thanks, Kai. All right, let's get into the roll up and the news of the week. But before we do, what's the Web3 word of the week, Kai?
Ooh, this one was a tough one. I think the word of the week is experimental. That's what Web3 is. That's what crypto is. Still, we are not this huge, giant industry that, everything is figured out and we know what's going on. It's a lot of experiments. And the first news we're going to talk about was unfortunately, very big experiment that went, unfortunately, very, very wrong.
And that is Terra Luna.
If you can see the chart. So for those that are not watching, and I don't mean to laugh because honestly, this is a terrible situation for a lot of people. It's probably one of the biggest collapses in one of the biggest events, I think, in crypto's history in what has been 12, 13 years now. So if you have not seen or heard of what's going on, the Terra Luna economy, which relies specifically on its stablecoin called UST, it lost it's an algorithmic stablecoin, meaning it's not backed by anything technically. It does have some different tokenomics where it's technically backed by the market cap of Terra Luna. So the Luna token itself, which was worth about $45 billion at its peak, which is pretty insane for an experiment. And anyway, over the last week, it had started to lose its peg. And we'll dive into not specifically why, but we'll give some details. And anyway, starting, I think it was Monday, it like completely lost its peg. And as you can see from this chart here, it's sitting at, I don't know, 40 cents, I think, or something.
46 cents.
At the time of this recording, it is a stable coin, meaning it's supposed to just stay at $1. So meaning anyone who holds UST, the dollars they had are now just worth 40 cents, similar to like, I don't know, inflation of, like a currency. So not ideal. And so that's on the stablecoin side of things. If we go to the next chart, we see the chart and the price of Luna, which, was kind of the darling over the last, let's say year and a half in this space. Over the last year, it went up, the token price went up to something like $120 almost, if not more, I think at one point. Market cap, as I said, over 40 billion. And basically, there's a few things. In order to try to save this peg, they had to sell a lot of this Luna. But at the same time, there are a bunch of big investors in this company or this protocol. And so they knew this was coming. So they sold their positions. And basically, it is down to, what is the price? Scroll up for a second. I think it's like
$1.
No. Scroll up. It's way less than that.
Oh, yeah.
1 cent. $120 down to 1 cent. Do you understand how massive that is? It is down, basically been down 99% every day, all week, almost. So unfortunately, there's a lot of money being lost, mainly by retail. I think a lot of the like big investors and funds got out. But it's very unfortunate for the Terra community and for any holders of Luna. And just not what we wanted to see happen. But also, I mean, it was known to be risky. I think there's a lot of people that had been mentioning this. Every other algorithmic stablecoin that's ever existed in crypto's history has gone to zero. So of course, this one was risky, and hopefully, listeners, you were aware of that and didn't put your life savings into that because it's an experiment, just like a lot of what Web3 and crypto is. And unfortunately, this experiment went very wrong.
Yeah, and I think, from the investment side of things, and this doesn't help anybody who's lost in this situation. I hope you're coping well and you're staying positive and staying focused on the long term. But the truth is, if you lost big in a situation like this because you were over leveraged, you gotta make sure any investments you make, you're willing to lose, right? Because all investments are risky inherently, and everybody's going to have a promise of something, but doesn't mean it's going to happen. So
absolutely. So there's a lot of stories that come out from this now over the last week as this one's playing out. And so we're just going to share kind of some of it and take some learnings from it. But up on the screen here, we have a tweet from Do Kwon. This is the founder of Terra Luna. And over the last year, as this, protocol has gone from basically nothing to, a $40 billion, $50 billion market cap, he has become extremely confident and basically bashes anyone who FUDs or says anything bad about this. And so I think he's feeling a bit of pain at the moment. Obviously, This is a tweet of him just reaching out to the community, kind of trying to explain what they're doing, what's happening. If we go to the next one, there's a tweet from him from last week where it started to depeg, and he basically put out this meme, and he said, "So is the UST depeg in the room with us right now?" And he says, "No, I prescribed 24 hours of pegging over the next 7 days." So he says it's going to be completely fine with this like kind of sad bear or whatever this is, just basically making fun at anyone who's saying that this depeg is risky. And obviously things did not turn out well for Do Kwon. So what happened? It's not just like, hey, this stablecoin just didn't work out. It actually looks like there was some, what do you want to call it? Bad actors that were involved here. And I'm not going to get too far into the details of this, but basically we can see on chain that a wallet bought, was it something like $1 billion worth of UST, which takes a lot of liquidity off of this. And they started like selling like crazy on Binance. They also bought something like $100,000 worth of Bitcoin, or 100,000 Bitcoins, not $100,000 worth, 100,000 Bitcoins, which is, I think, in the billions or something as well. And they were doing some trading with this in UST, which Do Kwon was involved in. And basically they just kept selling UST to push it down. And so basically Terra, or the foundation, they had to sell the Bitcoin that they had been buying over the last few months, which is why prices were going up. So this just like pushed prices down even further. And it wasn't enough capital to save the peg. And so this wallet that we don't know who it is yet, there was some rumors that it was Citadel and BlackRock. They've come out and said it wasn't them. But anyway, this wallet that did this, that basically single-handedly pushed this peg down and blew up this whole entire system, walks away with over $1 billion in profit, is what the wallet shows. And this was, I don't know exactly how, but trading and things that they're doing. So pretty crazy ordeal. But let's just look at like what else happens here. There's a bit of reasons of why this is a big deal other than just like the Terra ecosystem. There's kind of a contagion effect. So UST was in a lot of different ecosystems like Ethereum and like Solana, I believe, and Avalanche, etc. And so, of course, plus they were buying up Bitcoin, in which they had to sell. So this impacts everything. It's not just the Luna ecosystem. There's kind of the contagion effect, and that's why we're seeing markets. One of the reasons why we're seeing markets the way they are, are now. If we look at the Luna ecosystem, I mean, Luna being worth, I think the market cap of Luna now, which was 40 billion, is now like 200 million. Which is the thing that's supposed to back UST. So even if UST gets back to its peg, it has nothing backing it. So it's essentially useless, which is scary because there was a bunch of apps built in this system as well, which all relied on this peg and Luna. And so Anchor, which is a great protocol, and there's a bunch of other ones on Terra that I don't know what happens to them next. Maybe they can move to another blockchain. I don't really know where that goes, but doesn't look good for that ecosystem for sure. I think the other big issue that comes from this is just stablecoins in general are kind of like the killer app for crypto over the last year or two. The market caps of these things have been going crazy. There's a lot of utility there. It's a huge benefit using stablecoins versus USD, because you get off the Swift rails and the rails to get between different countries. And so it is a good thing. It's just algorithmic stablecoins are probably not a good thing, and something we want to, I don't know if we stay away from them or we keep experimenting. I have no idea, but hopefully just not at the scale that we're seeing right now. So where do we go from here?
Yeah, where do we go from here? Yeah, I think, where do we go from here? It's a big question. There's a few things that, we'll be navigating. Obviously, this is going to slow overall crypto adoption. There's, a lot of fear and FUD that gets brought in with something like this. And algorithmic stablecoins were really emerging and driving crypto adoption, and that will no longer be the case. So we'll see a slowdown. Obviously, the UST market cap shrinks. Trust has been lost, and there's more money being pulled out than is going in.
Sure.
I think as well, regulation will increase. When there's a breach of trust on this scale, it leads regulators to say, okay, we got to act here. We need to step up. We need to regulate this thing because this is not not what we want for our citizens to have this type of loss and be affected in this way. We need to protect them. So that'll happen.
Which isn't
and there's also
necessarily, which isn't necessarily a bad thing, right? I think
no,
regulation is probably a good thing. Well, it depends how it goes. But like, so long as we do it the right way, it can be really good just to get people to understand, how they can enter the space and what they can do in the space. And I think that's fine, especially for bigger companies who, don't want to enter because of, the absence of regulation. So I think overall, like, that's going to be fine. I think just one other thing to point out is this doesn't mean that stablecoins are bad. It just means that this algorithmic stablecoin was bad. You have DAI, which is a stablecoin, which is decentralized stablecoin. It's been around for years and has gone through all of these ups and downs in the markets and has been basically unfazed, right? But it's fully collateralized, over collateralized. So it has that, which is great. Then you have the centralized ones like USDC, USDT, which again are fully collateralized. And so like stablecoins is still a great thing. I think they still continue to climb, and probably all those ones I just mentioned benefit here. They're just, I don't know what this means for algorithmic stablecoins.
Yeah, definitely not a good thing for them.
Right. So this is some news that came out, I don't know when it was, a couple of days after all this was happening. And this just kind of, if we look at the crypto Web3 space in general, it's still very new, it's experimental, but it's very immature, unfortunately. And there are a lot of bad actors, like any new industry. This happens, right? It happened with the internet. So it happens here. So what we found out is that Do Kwon, who's the founder of Terra, was also, I guess, a backer or behind, and founded another company called Basis Cash back in 2020, which was another stablecoin that went to zero. But he was an anon at the time, so people didn't know it was him. But this was a pretty big deal back in 2020 for anyone who's in the DeFi space. So this is his second attempt at doing this, and both are basically going to nothing. So that's not cool.
And at the same time, not to spread too much FUD around right now, but there's a realism to being experimental, as we said with the Web3 word of the week, which is that when you're in experimental phase, everybody wants to jump in and be part of the experiment. And I don't necessarily think that everybody's a bad person. More so, you can get caught up in doing bad things because of the way experiments go, especially with the focus on monetary gain that can happen. And so some other news that came out about another founder was the founder of the Azuki NFT project was revealed as a creator of 3 other abandoned projects or rug pulls that he participated in previously, where basically he built the project and then left without fulfilling any sort of creation of the NFT project beyond the mint. And Azuki's a blue chip NFT project. If you haven't heard of it, it's one of the big projects. I can't remember what it was trading at its height. I feel like 25 ETH around, Kai. I'm not sure if you know. And now I think it's down to like 9 or 10 ETH. Now, one bad actor doesn't mean that the whole space is bad. It means that we need to be careful and be mindful, and be smart about where we invest in, because there's tons of great opportunities and tons of great businesses being built here.
Right. And I don't want to necessarily say they're all bad. Like, I don't think Do Kwon was acting in bad faith. I think he handled it really bad, as it was working out, and he became the cockiest person you've ever seen on Twitter and on podcasts, et cetera. And so I think that's not the way you don't want leaders doing that, especially when it becomes so big like it was. But I don't think he was trying to do this. You know what I mean? I don't even know that he benefited from this. I'm going to assume he probably did not. So I don't want to say he was a bad actor by any means. Same with Azuki. I don't know. I think it was part of Crypto Funks, which was I always thought was kind of a weird project. And there's 2 others. Yeah, I think the takeaway I get from this, and this is what I tweeted out this morning, was just quality always wins in the long run, right? Crypto Web3 has to be reminded of this every few years. Invest, build, and learn about the projects which are building for long-term sustainability. price action impacts you a lot less when you're in it for the right reasons and you're building for the right reasons. In 2017, 2018, there was the craze of ICOs, right? And most of it was just crap. And we needed a bear market to wash out all the people that were just talkers and that had all the fluff. And some amazing projects came through the other side, but it was the ones that were building for the long term, not trying to make a quick buck now. And so I think we're seeing the same thing here. And it's just, we're probably going to continue to see that in this space, because a lot of it is right now anyway, is pushed through because of monetary reasons, right? Like everything is an asset in this space, which is unheard of. And so there are a lot of speculators right now. And a lot of the users are speculators, unfortunately. And so that will get better over time as we have better projects and more utility. And as that plays out, we'll have people who just use this stuff and they're not in it to try to like pump and dump, basically. So it's just going to take some time, but for everyone who is either building or I'm sure if you're investing too or learn about the projects that have been here for a long time, right? You don't have this stuff happening on Bitcoin, for example, right? They know their ethos, they focus on quality, they focus on long-term. And we'll talk about actually some of this throughout the rest of the show with some of the news that we have.
Speaking of Bitcoin, some positive news here is although Bitcoin has been falling, as the whole market has been, El Salvador bought the dip. So El Salvador bought 500 Bitcoins at a price of about 30,000 US. So investing is still happening. Opportunities are still to be had, and there's still a lot of belief, obviously, in all of these. In the, as Kyle said, a lot of belief and a lot of support in the stable blue chip, the ones that have been here for the long term and they're building for the long term.
And you just called Bitcoin stable. It's currently down about 60% in the last
stable as a business. Stable as a technology, not stable as an asset. Definitely not stable as an asset.
Yeah, it is cool to see countries still buying and look, again, they are going to do this. Big companies, big countries, or small countries, whatever, like they're going to buy, they like this stuff. The utility is there for a lot of countries, a lot of companies, and they're going to get involved. We're about to show you that big tech is entering the space like crazy. But again, they are entering the space not with these experiments. They're waiting for things to get built out that show utility, that show they are, what do you call it? Like risk proof, I guess, that have been battle tested. And then they're going to get involved and they're going to build on top of it, or they're going to buy it, et cetera. And so whenever you're getting in these new projects that promise the world, like be careful, because it hasn't been battle tested, right? And you're seeing this with a lot of these, like all the darlings of 2021 were these alt L1s, Solana and Terra, et cetera. And look at what's happening to all of them right now. Last week was I think our word of the week was broken. And that was nothing compared to this week. So, yeah.
Okay, well, speaking about big tech, as I'm sure many of you heard, if you haven't heard, Instagram started testing NFTs this week. So Instagram is rolling out NFTs, which is really exciting. It's a big step towards onboarding. Instagram has what, 2 billion users, Kai? I don't know if you know. I think it's about that
at least.
So we're talking about reaching the masses. Now, what exactly is Instagram doing right now? Because I think there's a little bit confusing. Everyone says, oh yeah, like NFTs on Instagram, like, is it a marketplace? Can you buy NFTs? What's going on? It's clear that Instagram is taking a slow approach to this. So here's what you can do right now. And actually, I shouldn't say you can do. A select number of Instagram users have been given access to this feature, and eventually will be rolled out to the rest of us. So right now, these users can connect a digital wallet to Instagram. And then once you're connected to your wallet, what's that?
I said, I like that. We want onboard people in the wallets. So to interact with this, you need the wallet, and that's perfect. That's what you need. That's the most important metric, in my opinion, for this entire space. And Instagram's helping that. So I like that.
Yeah. If you don't have a digital wallet, everybody should have a digital wallet and should be using one and learning about them. So, okay, once you connect your digital wallet to Instagram, then you can share, Instagram calls them digital collectibles. You can share your NFTs. So you could choose to, you can choose this. It doesn't automatically just share all your NFTs in your wallet. You pick, okay, I want to share this NFT on Instagram. Boom, shares it on Instagram, and then automatic tagging of both the creator and the collector will happen, which is a big bonus to the blockchain, is this trustless information, permissionless information, right? So, okay, and the way this will appear, because Instagram has to create a way for you to know that this is visually know that this is an NFT, is there is a shimmer effect. I keep seeing this like shimmer effect. You got to go on Instagram and find one of these creators in order to see this, but basically the NFT will shimmer and then you'll be able to see it. But as well, it'll say digital collectible on it, and you can open it up and you can see who the creator was, what the project was, and more information about the NFT, which comes from the blockchain.
And if you want to see this, I think you can go to, what is the first creators? Go to the left there. Who's the one that posted this? Oh, too far.
This is creators.
So if you go to creators, yeah, that's the Instagram handle. But I don't know that they're the one that posted the NFT, are they?
No, they just posted. This is a
right there. Hold on, right here. What's the name here? Who is this? Stella's. Anyway, I found one before. We'll share it in the notes so you can click through it and go to the actual like Instagram account so you can see it play out. Here's the cool thing. I think we talk about the DeFi mullet all the time, right? And we're seeing that play out here with NFTs. And you said it. They're like, Instagram calls it digital collectibles. That's a much more friendly word. My mom understands what that is. She doesn't know what an NFT is, right? So when you think about adoption and sort of this thing we talk about DeFi mullet of like, we need better UX on the front and then use the blockchain stuff on the back end. We probably won't use the word NFTs in 5 years from now. I hope we don't anyway. Non-fungible token, that's an awful thing, right? And so Instagram kind of like taking the lead here of going, how can we make this actually user friendly for the people? And this is what's the one good thing, or one of the good things about bringing big tech into the space, is like, they are the experts on UX. These guys build apps that bring on billions of people. Okay. This is good that they are doing this, and they're going to create an experience that makes sense for mainstream, not for developers or people who have been in this space for a long time, and changing the names and making the experiences better. This is perfect. This is exactly what we want.
Yeah, no, it's a great point. The UX is so important, and digital collectible is a way better word. So what is Instagram building? What blockchains are they using here? Kai, do you know?
Yeah. So down in this tweet, we got a tweet up from Instagram where they announced this on the 10th of May. And so they're starting with Ethereum and Polygon are the two main ones that they started with. They do say that coming soon is the Flow blockchain and Solana. So Ethereum, obviously they're going to start there, which is the longest standing, the least riskiest, the most decentralized, et cetera. Everyone that's come in has done this first. And it's also the most trading volume and everything. Like most of the NFTs are on there. Polygon is the kind of the second biggest one for this sort of stuff. And the other reason they would go Polygon immediately and not Solana, which is also one of the big ones, is the language and that you use for Ethereum and Polygon are the same, and they're both EVM compatible. So meaning once you link it with Ethereum, it's very, very easy to do it with Polygon, just like it's very easy to go do it with the layer twos like Arbitrum and Optimism, et cetera. So you can expect those will come as well. The challenge is it's very difficult. They basically have to rewrite the whole thing when they want to go to something like Solana, because it's not EVM compatible. It's a whole new world that their developers have to figure out. So this is why you often see EVM chains kind of group together and go first, because they almost have their own like ecosystem, even though it's a different blockchain, it's all in the same language and it's all EVM compatible. So it's just much easier. So that's where they start. And then eventually they'll build out Solana and Flow. What does
EVM stand for, Kai?
Ethereum Virtual Machine. So I don't exactly know the details there, and probably most people don't need to know it. But yeah, I don't even want to try to explain what it is, to be honest.
It's there.
Okay, it's basically the way that it's built. So yeah,
good enough. That's all we need to know. I'm happy with that information. Who else is building in Web3 is Google. So Google just announced. Go ahead, Kai.
Yeah, Google's building a Web3 focused team, and they announced this last week. And so they are not building like a specific protocol or something with a token or whatever. They've actually said that they want to do this sort of indirectly. They don't want to be related to a specific cryptocurrency, they said. So what they're doing is they are building tools for developers to build applications on blockchains to make it easier. So they're going to help speed up the development of all of these dApps. So that's really cool. It's just an announcement. I have no idea how far along or what they're building yet. We will obviously keep people in the know as that comes out more. But again, great to see that they see the benefit of this space and they see that this being the future. And so they're going to help developers build it out.
Well, and really, this is what Google did for Web2. So it's awesome to see, because like you said before, big tech are UX experts, right? That's their product builders, their product designers. Really, how many of us have a Gmail address, right? Google took email and brought it to us all in a way that we all could use it to the best of its abilities, for all of its positives and negatives. So it'll be exciting to see what they will build to help onboard more people onto Web3 as well.
Yeah, absolutely. So this was also some really big news, which at the time felt really big. And now it seems like it doesn't really matter after everything that's happened this week. But so we talk about Bankless a lot, one of our clients that we've been working with for a long time. So I can't remember when it was, over the weekend, I think it was Saturday or Sunday, their YouTube channel, which they have, I think 150,000 subscribers and is very popular, was completely shut down. Every single video they've had for the last however many years was completely blocked by YouTube. And so that was a big scare, obviously, and just a huge risk anyway, right? Like this should not be happening. It's crazy that this is where we're at, but this is again why we are building Web3, because like Bankless has been building this business, which YouTube is not their entire business, but it is a big part of it. And it just can get shut down without even anyone saying why. Right? Like there's not even a warning, and they just lose all of the followers, their subscribers that they have, all that reach, which is a big revenue generator for them, right? A lot of their communities over there, and it just completely shut down. So Bankless, being the bosses they are, they went out and they started tweeting like crazy. They got their community involved. Everyone started tweeting at like Google and YouTube and whatever. And within 24 hours, they not only had their YouTube back up, they actually received a DM in Twitter from Susan Wojcicki. How do you say that?
Yeah, Wojcicki.
So
the CEO of YouTube. The CEO.
She's the CEO of YouTube. I don't know how to say last name, but anyway, she DM'd them or she messaged them, and she actually just tweeted publicly and said, "We clearly made a mistake, Bankless. Glad our teams were able to fix things quickly. Can you DM me your contact info? We can talk offline. Love the level of conversation happening around crypto on YouTube. Very interested in Web3 and the role we can play in the topic." So that's huge, actually. And Bankless is trying to get her on the podcast right now. That would be super sweet if they can. I don't know if they will. But I think what this says is like, hey, they're aware. This is the CEO of YouTube, right? I don't know how many users are on YouTube, but it's billions. And they're aware, and they want to find a way to integrate in and to make this work, because they are also launching NFTs on their platform probably this year as well, they've announced. So just another tech giant that seems to be a friend of the space and wants to work with the community and figure out ways to dive in. So that's cool.
Yeah, really, really great to see, because it's scary. It's scary to think about being deplatformed, and it's scary when your entire business is on one of these big central platforms and they own your data. So good to see that a platform like YouTube, and hopefully the others, if this similar thing happened on Facebook or on Instagram or any of these others, would do the same, because the last thing you want to see is somebody create a business and then have it taken away from them because of some algorithm that decided that their content was bad. Right.
Oh, and actually, back to the Instagram thing for a second. I forgot to bring this up. So Mark Zuckerberg was actually on the Tom Bilyeu podcast, the founder of Impact Theory. He's gotten really big into Web3 and NFTs and that. And so he's been a big proponent of this, similar to like a Gary Vaynerchuk. But anyway, he had Mark Zuckerberg on, and it was a great podcast. Mark's been on a lot of them recently, and he seems to get it, right? Although he owns this massive, massive behemoth of a centralized company, he seems to get the whole decentralized component here, what we're trying to build. And he talked a lot about that in the podcast. And basically his kind of timeline for what's going on here with Instagram is they're testing on Instagram. NFTs will soon be on Facebook as well as their other apps, which probably means, I don't know, WhatsApp, Oculus. I don't know where else they'll go with that, but he sees this as a bigger thing and they just want to test right now. And then they'll move it across all applications. He also said something cool, which is they're looking to integrate AI to use 3D NFTs and specifically with Instagram stories. And so what I think this is, which is actually really cool, is if you've ever seen the NFTs that are like avatars, like a Meebit, for example, or I don't know, there's like Cyberkongs, there's a bunch of them now. I think Snoop Dogg's NFTs are these avatars that you can
invisible friends or
exactly. Yes. So these are ones that you can like go into a metaverse and move around and they're like characters basically, but you own them as NFTs. And so there's ways that you can use like AI to like put them in your videos and they could be like behind you, or you could like dance with them. And like, I don't know, a lot of like, think of like Pokemon Go style. And so they're looking at integrating that into Instagram stories, which will be super cool. I've seen a lot of videos of people experimenting with this. So yeah, it looks like we are making friends with these big tech giants, hopefully, and this could be good news.
Yeah, I think they all know that this is the future and this is the way it's going, which we all know. And so let's all build together, as we've always said. Let's all collaborate.
Absolutely. So next up on the news, another big tech giant, Telegram, which I think they have like 500 million maybe users. It might even be more at this point, but they are now letting users send cryptocurrencies right inside of like the chat through and I don't even know what this one is, but TON blockchain, I guess it's the open network is what it's called. And so basically they've just made it very easy and seamless to send crypto from one user to another right inside of Telegram. And so I think you're like, what's actually interesting is in China, for example, they have big tech behemoths as well, and it's their social platforms. But in China, their social platforms are also their banking platforms. They're integrated in one. And so it's very normal to be like, think of their version of the Facebook or Instagram. And like in there, you just move money around. You can make payments. You can send money to each other. It's like their apps are these like combined big apps of banking services and social. We don't have that on the Western side of the world because governments haven't allowed that. And it seems like that's kind of what's just forming under the hood anyway, because crypto just enables that. So it'll be very interesting. I think they're going to see social and payments and banking all kind of combined in these like one big apps kind of thing.
Okay, so then we've got some sort of just like quick hitters for you of some other big moves that are happening, big companies making moves in the Web3 space. First up is Billboard's president announced that he's stepping down from Billboard. Billboard Music is a big entertainment and music media company. They produce the Billboard Music Awards. They produce Billboard Top 100, been around for decades. And so the CEO is leaving Billboard to become the CEO of Doodles. And
the president,
Doodles,
CEO, the president of Billboards.
President of Billboard, right? President, CEO, the guy at the top of the chain. Although at Billboard they probably also have a CEO, so he might be below him. He's leaving to become the CEO of Doodles. Doodles is one of the blue chip NFT projects, so it's probably a top 5, top 10 by sales volume NFT project. But what's really interesting here is he's making a move to an NFT project from this, massive entertainment company, because clearly he believes in the future of these NFTs, right? And this NFT project Doodles is really just a PFP project right now, but they've done super well. They've raised millions of dollars and they're building a business around it. We talked previously about a month ago about Doodles was partnering with, I can't remember which beverage company, but they were partnering with a beverage company and putting Doodles brand on the cans of that beverage company. So you're going to see a lot of these big NFT projects start to infiltrate other areas of consumer goods, because really these projects Doodles is a brand that can be used across any consumer good.
Absolutely. And it's kind of funny to see this. It's like, if you see the picture up on the screen, it's like, so you have Billboard, which is like a big, corporate organization, right? That has a big structure. And it's like he stepped down from that to be the CEO of, and you see the Doodles picture, and it's like this like cartoon that's puking out a rainbow puke or something with like another eyeball that's like off of his face. Like, it's like, what is this? And so I was just, as you were talking, I was trying to Google, I was like, who is the president? I actually don't even know who it is. It's Julian Holguin. And he's 43 years old. Cause that's what I want to know. Was this like some old dude that was the president that's just like now going to be the CEO of a NFT project? Like, this is crazy. So I guess he's still fairly young, 43. And he sees the future. And I think I would bet in his circle, people are probably looking at him like, what are you doing? Like, this is insane. But I bet you the same thing happened with the internet back in the day when people were moving over to tech companies, even smaller ones back then. People were like, what the heck are you guys doing? So we'll see how this one plays out. This is really interesting.
Yeah. Other big news from the I wouldn't say Web2 space, but from the retail space is Starbucks has announced that they are creating NFTs. And they're calling it the digital third place. Starbucks brand was always, the idea was that going to a Starbucks coffee shop was your third place to be. You have your home, you have your work, and then you have your Starbucks. And so they're launching NFTs and getting into the space as well. Kai, do you know the specifics of what they're doing with these NFTs? What they're
not
offering?
The full specific, but if you stop right there, actually go down one more paragraph. So basically what they're doing is they're launching a series of branded NFT collections, and it has utility. So the ownership will initiate community memberships. It allows for access to like exclusive experiences and perks and things like that. And the themes of these collections will be born of Starbucks artistic expressions, both heritage and newly created. So it's sort of like a membership, I guess, that they're going to do with these NFTs. And I think it's like a reward system essentially. So kind of like loyalty rewards, but this way it's in NFTs and has some branding and community around it. Actually super cool. Here's what they said about NFTs. So this was from Starbucks on their site. We believe NFTs have broad potential to create an expanded shared ownership model for loyalty, the offering of unique experiences, community building, storytelling, and customer engagement. And while doing so, also being a source of a creative business that can benefit a number of stakeholders in the process while creating a new type of digital ecosystem and complement Starbucks' current digital platform offering. So they think it's better for the users. It creates way better experiences. And ultimately, they think it's going to be better for their bottom line, which is amazing. And so I just want to highlight one thing here is like, look, right now we have this blow up of Terra Luna. We have prices going down. People are probably scared. Look at the adoption we're about to have or are having, right? Once you have I don't know how many people use Starbucks every single day, but it is a hell of a lot, right? And then you have Instagram, you have Telegram, and you have Twitter has NFTs, and you have, Google moving into this in YouTube. And it's just like, guys, this is going to be, but it's going to be more and more everywhere, right? And so this adoption is coming, and it's coming fast. It's currently being adopted and growing faster than the internet itself did. So zoom out, turn off the charts, don't look at your portfolio, whatever. This is happening, and it's happening fast, and it's exciting. So maybe, Jay, we're going to have no more FUD weeks in our roll up. I don't know. Can we do that?
Well, I think it goes back to the word of the week is experimental. Right, so true. When you're experimental, there's going to be mistakes. There's going to be lessons to learn, right? Like, you think that you can experiment and create a new pharmaceutical drug and just do it overnight. No, you got to test it 1,000 times, and it's got to break, and you got to fail, and then you learn and you figure it out, right? So that's part of the process here. But I also think that there is, unfortunately, FUD. The media loves FUD, right? Like, we didn't even want to start with Terra Luna today. That was not what we were most excited to talk about, but we started with it because it's what everyone's talking about, and we're here to bring you the news. And so we're going to talk about what everyone is talking about, because that's what everyone wants to know about. It's important for better or for worse, that you want to be smart around the dinner table. You want to be smart in the office. You want to be able to discuss these topics. So, there's this balance of following the media and the trends versus talking about the maybe not so exciting and not so click-worthy stuff. But, so we try to bring you a balance.
I think people also probably want to know why they're why their portfolio is tanking. And so I think we had to start there to help give some insight.
Well, yeah. And I think we'll also, we're going to start to, using our newsletter as a place where there's so much news each week, and also our Discord as a place where we can share other news, because we can't even get through everything. I mean, we're almost at the hour here, and we're going to have to keep going because there's just so much news. Okay, sticking with some big companies going crypto, going Web3. AMC Theaters, which is one of the largest movie cinema companies in the world. They came out with they're a public company, so they came out with their Q1 report, I think it was a couple weeks ago, and in that they announced that 1/3 of their online payments are made in crypto, which is just incredible adoption to see. So this is people going now, I guess maybe you could argue people going to movie theaters are the younger generation, and you can currently use Dogecoin to buy your movie tickets at AMC. So I guess there's just a whole bunch of young people out there buying movie tickets with Dogecoin. Now, regardless of what the coin is, that's not what I'm trying to make a point on is Doge. The point is, wow, what I think we all keep saying that this is going to happen and this is coming, but it's happening way faster. I feel like every month I'm like shocked at how fast it's happening. It's like, wow, 35% of digital payments at AMC are made in crypto.
I was mind blown when you told me that this morning, Jay, by the way. That's insane. And just to clarify, Dogecoin is not the only one they have. They do have Bitcoin and Ethereum and others. So they just adopted Dogecoin, I think last month it says. So yeah, it's not only that. But yeah, that's amazing. I'm mind blown. 1/3 of people used crypto to pay. That's just, I don't even believe it.
That's what I felt. But
that's huge.
But it shows the adoption is happening at all ends of the spectrum. You know, the big companies are adopting it, the customers are adopting it and using it.
That's a good point. And that's what's really cool about this space is it literally is coming from so many angles, right? Mm-hmm. It's like, okay, stable coins are looking a little bit scary. There's probably gonna be some regulation there, but like, look at NFT adoption by all the big tech firms. And then there's payments, which is looking amazing. And it's like, there are still like, there's just so many different aspects to this ecosystem, and they're all kind of fighting at the same time and coming in. And I think that's just makes it so strong, you know. And this might be our most bullish episode ever, even though the beginning was all fun.
I like it. Yeah. Okay, one more payment news is Gucci has announced that they're going to begin accepting Bitcoin in some of their stores. Gucci's definitely been a leader in the adoption of Web3. They have some NFT projects that they're part of. They've been experimenting with some metaverse stuff. Very similar to Adidas was very early in the space. Gucci's really been a leader in the space, which is awesome to see. Again, just more brands coming on and experimenting with how can we use Web3 in our business, and accepting Bitcoin is something that you're going to see a lot. I mean, a lot of people are accepting crypto payments in their retail stores.
Another big one.
Yeah. Spotify is opening or is building in Roblox. So Spotify, one of the biggest music companies in the world, has announced that they are going to build in Roblox. They're going to build Spotify Island, which is basically aimed at creating a gaming experience so that Spotify can target the younger demographic, that's where they are. They're on Roblox. Neither Kai or I have kids, but I know if we did, and my friends that have kids, every time I'm over at their place, their iPad is open and they're playing Roblox. So another big announcement. Tons of people looking to build in the metaverse and get into the space.
Yeah. And look, Roblox is not crypto or Web3 by any means.
No.
It's metaverse, but Spotify is also hiring multiple positions for Web3 to bring NFTs to Spotify. So probably music NFTs. I don't know. We'll see how that goes.
Yeah.
But that's cool too.
Well, I also saw Napster was in the news this week.
LimeWire.
Somebody No, Napster too.
Yeah.
LimeWire's made a comeback. That was like a month ago. I remember seeing LimeWire, but somebody either bought Napster, like the rights to the brand name, or they fundraised, but something.
What?
So like all these, old brands are making comebacks on the backs of Web3 because there's just so much opportunity.
Napster was my favorite. I hope that they make a comeback. Okay, so we talked a lot about, this is sort of like onboarding users. We talked a lot about like UX that all of these companies are going to help with. And so I had a thought, I don't know, it was last week or whatever. And just hearing a lot about what Coinbase is doing, and they're launching their NFT marketplace right now. And I posed the question, is Coinbase becoming the Apple of Web3? We had a big conversation about this in our Discord. We had a lot of people talking about it and commenting on Twitter as I posted this. The reason why I say this is, think about what Apple did for the internet / for computers, let's call it, and even mobile phones. They controlled the UX from A to Z, right? Like you get your phone, you get your computer, and it's just like they control it all. They have the browser, they have the, they have the phone, they have the computer. Now they have your AirPods, they have your, I don't even know, whatever else, right? They have Apple TV, they have everything, right? And so you could literally just use Apple products for like everything you want, essentially. Even things of like iMessage and iTunes and Apple Podcasts, and like the list goes on, right? And what's good about that, other than the fact that it's all owned by one company, but what is great about that is the experience is so easy, right? The UX is so easy because they control it all, right? It's when it becomes fragmented, that becomes a lot more difficult. And so when I look at what Coinbase is doing, is like, they're almost trying to do the same thing. I think they're still very early stage. But if we think about what Coinbase has, they have the exchange, which is the largest in the world, except for maybe Binance, but we don't know their numbers. So meaning that's the starting point to enter, right? So that's exchanging your fiat into crypto, right? So the starting point for most users is Coinbase, and they control that UX. Cool. Then to get into the Web3 world, you need a wallet, a non-custodial wallet. So Coinbase is not the number one here, MetaMask is, but it's gaining steam, and they're working on that. And I'm sure it's an easier experience to get this non-custodial wallet from Coinbase than it is to go to a different UX of MetaMask or whatever. So they now control not control it, but they're creating the UX of the non-custodial wallet, which is cool because you're going to use that for literally everything. We talk about wallets all the time. That's how you're going to interact with apps. And it's how you're basically going to store everything, your NFTs, everything like that. Then they have the Coinbase marketplace, the NFT marketplace, which is where you can create, sell, and trade NFTs. So again, that all comes into the Coinbase branding, the Coinbase UX. I'm sure there will be benefits of, using your Coinbase wallet inside of there. Maybe it just makes it easier. I don't know. Maybe they'll even integrate it into their exchange somehow. I don't know. And then you have Coinbase Commerce, which is basically like for businesses to invoice clients. Then they can just use Coinbase Commerce. Again, same branding, same UX. You use your existing wallets. So they control the flow of that. You also have, what's the other one? Payments. So the user, when they want to buy things from the real world, they can use Coinbase Commerce. So for example, if I want to create a product and I want people to pay in crypto, you use Coinbase Commerce, right? And so now users get the full experience of like, I want to switch my fiat into crypto, right? I want to move it into Web3. Then I want to buy something back in the real world. And instead of using fiat, I can just use my crypto wallet and use this Coinbase Commerce, and that flips it over back to the business. And so it's like that full cycle there, which I think is really interesting and really good for Web3, right? Because if you think about what Apple did for personal computers, it brought in the adoption. It wasn't until Apple started doing everything they were doing to where at that point is when everyone started buying personal computers, bringing them into their home. And that was like the inflection point, right? And so we need that for Web3. If every company is building something different, yes, we have interoperability and composability in Web3, but you still need that UX. And I think Coinbase is scroll down a little bit more, but I think Coinbase is really ahead on this. And so I posed the question, and Jay, I'd love to hear your thoughts, is like, what else does Coinbase need to do to really control all of the experience? And so there's like, I don't know, maybe they need a DEX. Right now we use Uniswap. Maybe we want a Coinbase one. There's a DApp. Maybe they want to create the DApp for creating ERC20 tokens. So these are your social tokens, et cetera. Right now you use things like Coinbase or Mirror or whatever. And that's kind of a starting point for all businesses in this space is you got to create your NFTs, you got to create your tokens. Well, they already have the NFT side. Now, will they go to the token side? Maybe. Maybe there's DAOs is going to become huge, right? So are they going to have some sort of DAO tooling where now that's the CRM for DAOs or something? I don't know. And then who knows? Do they build their own blockchain? I hope they don't, but maybe they'll integrate and build their own rollup on Ethereum, for example. And maybe they'll create bridges so that you can get around the blockchain system much easier. I don't know, but these are just some of the thoughts. Actually, there was a good take here from David Mihal, who we had on the podcast a couple months ago. He says, my thesis on Coinbase has been that they're positioned to be the biggest bank in the US, right? He's like, millennials hate banks, but most have a Coinbase account. Even more true for Gen Z. And so maybe they also become a bank, right? I mean, they already are basically a bank, but they could become the biggest one.
Yeah, I think the main thing that I really take away from this, and that you made that point at the beginning, is most consumers want simplicity.
Right.
Most people don't want to have 10 accounts in order to do something, right? So if you can make that simple through one service, through one provider, and now obviously there's a balance between centralized and decentralized, and I'm not going to open that can of worms right now, but if Coinbase can be that one on-ramp for Web3, then that's exactly what we need right now, because it's too complex to try to explain to somebody the UX of opening a wallet and then going over here and then buying over here and then going over to this DEX and trade your coins here and then bridge it over here. It's a lot, right? So yeah, I think all the power to Coinbase.
And I think one thing to clarify is, like, we talked about how the other big tech companies have this problem that they own so many things. That's not how this works here. And that's the beauty of Web3 is, yes, they own the non-custodial wallet, but they don't own the assets in the wallet. They can't shut down your wallet. They actually don't have any control over that wallet. They just created the UX for it, right? Same with the NFT marketplace. They created the marketplace, but they don't own any of the assets that are on there. So even if Coinbase marketplace goes down, you can just go over to OpenSea and use that, or go over to LooksRare and use that, right? So all of these tools, and now they do have a social component to their marketplace, which is not built on the blockchain yet. They said they're going to. So like, you don't own the social reputation, but that will come as that technology improves. And so it's okay if they own the whole UX experience, because they don't own any of the assets and the things that we really need. So they can't just block you like what YouTube just did to Bankless. So I'm actually pro Coinbase taking over the Web3 world and building this out. I think it's gonna be very good.
Bullish on Coinbase. All right.
Which their stock is just got completely crushed after all this as well. So this is not financial advice, but like, apply to me.
Speaking about Coinbase's NFT marketplace, it's also now open to all, because initially they were just testing it, but now it's anybody can use it. But no users are really showing up, are they, Kai?
Yeah, I mean, so maybe my thesis is wrong, but it's super early. I think, they haven't really done a big push on it yet. They're probably working through kinks and things. So this is like the headlines all came up that, they finally opened up to everyone. And there was like less than 1,000 people that started using it, which is tiny. But like, I'm not too concerned about it yet. I think we got to give it some time. It's so early. So we'll see how that goes. But if you haven't checked it out, if you were on their list, I believe you now can. So that's cool. Okay.
And then some information about Coinbase to be aware of is, and this is where we get into the legal side of all of these tokens and NFTs, which I'm certainly not an expert on. But I think this is where it's important to do your own research and to understand.
Understand between a custodial and a non-custodial account. That's what we're exactly here.
Exactly. So why don't we actually start there, Kai? Explain the difference between a custodial and a non-custodial.
Okay, so you have the Coinbase exchange, which is where you have an account on. You create an account with a username and password. You got to do KYC, whatever. Then you have the Coinbase wallet, which is a non-custodial, let's call it non-custodial account. Okay, they both hold your assets, right? The difference is Coinbase Exchange is the same as like a Facebook, for example, where they own it all. They own your account and they can shut it down whenever they want, just like YouTube did, right? But on the non-custodial side, meaning there is no custodian, Coinbase does not own that account. You created your own and it's stored on your device and it's accessed through your seed phrase. Coinbase cannot do anything with the assets on the Coinbase wallet. They can do things with the assets on Coinbase Exchange because they are your custodian. They are holding your assets for you, similar to like a bank is holding your money for you or holding your gold for you or whatever. So what's coming up here, Jay?
Okay, so what's coming up here is in the event of a bankruptcy and a bankruptcy of Coinbase, customers could be treated as general unsecured creditors, which basically means if Coinbase had a bankruptcy and their exchange, and you had your assets left on the exchange, you didn't pull it off into your own wallet, you didn't take custody of it, then your crypto assets could be considered property of the bankruptcy estate of the exchange, and they would be held in custody by the exchange. So you could lose access to your crypto assets. So use exchanges to buy. That's great. Great on-ramp, very simple, whether it be Coinbase or another exchange. But we recommend that you take your assets off that exchange into your own custody, into your own wallet, whether it be Coinbase wallet, MetaMask wallet, or Phantom or another one.
Or a ledger. I highly recommend you get a ledger or a Trezor
Even
and
better.
do the cold wallet style.
Yes.
Yeah. Not your keys, not your coins. That's what they say. That's what the Bitcoiners have been saying for many, many, many years. People still don't learn though. But here's another one. Here's another example.
And here's an example of this playing out in real time. So when Luna was falling, Binance, which is an essential exchange, stopped their users from being able to do Luna withdrawals. So all of a sudden, if you owned Luna on the Binance exchange and you wanted to get out, you couldn't. You were stopped by the centralized exchange. And so that's a centralized exchange taking control of your assets in a way that, really, you don't want to see that. Nobody wants to see that.
And this is what we saw with like Robinhood back in, I think it was 2020, maybe it was 2021, right? Where they stopped, was a GameStop. And this is the problem with centralized companies that control assets specifically. Centralized companies is not a bad thing for other stuff, but when it comes to your money or your business, like you don't want to be at the risk of these companies. And this is the whole idea of Web3. So I'm just going to keep pressing that button and pushing that every single episode. I think is, we need real Web3. We need actual permissionless stuff. And crypto exchanges are not that. They're just a place to buy your tokens, but you get them off there and you go to where it's permissionless. You could buy. There was no issues in buying or selling Luna on. I don't even know what the exchanges are that have Luna, but let's say Uniswap or whatever else. Those are fine. It's just the ones that are controlled by people like Binance, and why they did it, I don't know. Maybe the people from Binance are friends with people from Terra. I have no idea. But this is the thing. If they can do it, they probably will.
And I think what's really important here, and we can't say it enough, is the education is what's most important for all of us right now. You don't need to understand every token. You don't need to understand NFT projects. What you need to understand is digital ownership and how that works, right? And so you need to understand digital wallets. And if you don't understand that stuff, shoot us a message, ask us. Maybe we need to do a whole podcast on how to do this, right? We want to hear from you. Message us in Discord. Maybe we need to have more conversation about this because we want to be a part of helping you understand and learn how to do this in a safe way.
Yes, sir.
All right. What is the Web3 protocol / tool of the month?
Well, it's not a protocol. It's not even really Web3, but it's a tool. Let's call it a tool.
It's a tool. It's a tool.
It's actually super cool. When I first heard about this, I was like, I had to double look. I was like, is this actually real? So Bankless DAO, which we've talked about before, is a DAO that I am not actively a part of, but I've been a part of and still am now. But they just launched or are launching a really cool new I guess, what do you call this here? It's a Visa card. Scroll down a little bit so we can see the picture, but it's a Visa debit card. And instead of like, we're starting to see this in the space where you spend with your Visa debit card and they'll give you like rewards in Bitcoin or whatever, right? We see this with Gemini card and BlockFi, et cetera. This one is integrating into the DAO ecosystem. And so what they've done here is somehow they have this partnership with Visa to do this, where it's going to integrate with DAOs. And essentially what happens is as you spend, you can earn tokens in the DAO that you are in or want to be in. And so there's a few really cool things here. So you purchase, spend, and you don't just earn the token, but it actually gives you governance to start voting and doing things inside of the DAO, right? And we'll break down how this does this, but this also generates revenue for the DAO. So scroll down a little bit to the breakdown of the I think 3 things or 4 things that they're saying that this does. Here it is. So as you spend, you'll earn governance power by swiping your card, and that helps your DAO grow too. The more tokens that we buy for rewards, the higher the price. So basically what this means is that in order to get these rewards that you're going to get for buying whatever you're buying in the real world, Bankless DAO needs to buy up more of the bank token so that they can reward you with it. And so that's buy pressure on their token, which improves the price of it. This is really good. So it's kind of a win-win for everyone. We are earning, bank token or whatever DAO it is. And ideally price is going up as that because it's buy pressure for it. So that's cool. It's utility, right? It allows you to enter your DAO. So sometimes if they're more established DAOs, you have to buy the tokens to enter a DAO if you want to be involved in whatever the community is. Well, this allows you to earn without having to buy. You could just, pay your groceries and pay your rent or whatever with this card, and you can start to earn the token, which then will give you access into the DAO yourself. So you didn't actually have to buy anything. So that's really cool. And then it also supports the community. So a portion of that cash back will go back to the DAO and to their treasury. So instead of rewards going to a bank, for example, they go to the DAO instead, and it helps to grow their treasury so that they can do other things. Maybe it's to pay you to help out and do certain tasks. So really, really cool. I'd never even thought about this as a thing that's going to happen. But what Bankless DAO is doing is actually creating this for all DAOs. So it's not just for Bankless DAO. They are testing it in their own DAO first. I've signed up to get the pre-launch, and hopefully I can use this, and I will definitely give feedback to everyone that's listening. But eventually this will be a thing for all DAOs to use. And I think that's super cool. 1, that Visa's down to do this, and 2, that this is now a possibility.
Yeah, I think it's amazing to see the usage of current tools that we're very familiar with, such as credit cards, debit cards,
right,
as a way to get involved in community, which is really what DAOs are. It's tokenized communities that allow you to build things together. Well, wow, like now I can use a credit card to get more involved in that community and support that community. And Bankless is doing this not just for themselves. And I think that's why we picked this as the Web3 tool of the month. Was this isn't just about Bankless. This is about all DAOs. DAOs are all growing. They're the future of, decentralized work, which is so powerful. And we're seeing that movement happening in a big way right now. So, wow, give me a way that I can support my DAO by just spending money day to day. Incredible. I love it.
And you can think of it as like, say, the company you work for. It's like, as you spend, you are now like getting more equity inside of that company.
Yeah.
The difference here is that DAOs are more community driven. When you think of a company, you think of sort of hierarchy. It's people doing it because they have to do it, not because they want to do it. It's not necessarily a bunch of like-minded people, et cetera. Whereas a DAO or just social tokens in general is more community led. And so, like you said, it's supporting your community and getting more governance, or more, you want to call equity as well, in your community. And that just creates more value to everyone inside of the community. And so it benefits everyone, instead of like, I wouldn't really want this if I was working at, I don't know, Facebook or something, because this just benefits Mark Zuckerberg and whoever else owns it. Right. So I guess it would benefit me a little bit, as I would have some equity, but I can't vote with that equity. So it doesn't do anything in terms of the direction. So really, really cool on how this is going to help evolve DAOs.
All right. Well, the most bullish podcast we've had yet comes to an end. I think we might have started on the low, but we finished on the high. Lots of exciting things happen in the space. Stay positive. Take care of your mind. Go for a walk, get out in nature, take a deep breath. Don't stare at the charts too much. The short term can be very painful, but we're all here for the long term. If you need support, reach out. We're here for you guys. And if you have not already done so, fill out our application to join the Web3 community as we go to a tokenized community, so you can get our free NFT. Fill out our application. We'd love to have you in our community where we're talking about all this stuff every day and supporting each other.
Well said, Jay. Well said. Ditto to everything he just said, and we'll see you in the Discord. Thanks, everyone.
See you guys. Thanks, everybody.
Thank you for listening to Web3 Academy. We hope this helps you along your Web3 journey. And if it does, please share this episode and subscribe so you don't miss the next one. By the way, if you've yet to join the Discord community, you are missing out. This is where all the magic happens. This is where we learn, where we ask questions, where we network. You want to be in there. The link to join is in the description below. And finally, a quick disclaimer. Nothing in this podcast was financial advice. Crypto and Web3 can be risky. You can literally lose it all. In fact, if you invest on account of what we say, you probably will lose it all. So don't do that. In all honesty, the point of this podcast is to remove the noise of markets and price and focus on utility and implementation anyway. So you should not take any of this as financial advice. Thank you, friends, and see you in the next one.